Welcome back, everyone. Today, we're going to do a deep dive into Alphabet Inc., Google's parent company.
That's right.
And we're going to be analyzing a recent report, very, very recent, and we're going to determine if their stock is worth buying right now.
Interesting.
Get ready for a wild ride because we're going to be navigating AI investments, their market dominance, hefty expenditures, and a landscape teeming with competition.
Lots to cover.
Is Alphabet a smart investment? Let's break it down.
Sounds good.
So what's so fascinating about Alphabet?
Well, I think what's so fascinating is just how diverse it is. We have Google services, and that's their bread and butter, their search ads, YouTube, Android, the whole shebang.
Right.
Then you have Google Cloud, which is kind of their enterprise solution, for businesses. And then finally you have the other bets category, and that's really where they're pushing boundaries,
Right. So it's not just search anymore. I mean, the report really hammers home the strength of Google search, though. I mean, it's the undeniable leader, would you say?
Oh, absolutely. Yeah.
And this dominance creates what analysts call a wide economic moat, basically a huge advantage that makes it incredibly tough for competitors to gain ground.
Right. You can think of it like this. You're a company trying to compete with Google search. It's like you're trying to open a burger joint right next to the most popular one in town. People are already going to the established place because it's familiar and reliable. That's Google search.
Right.
It's this familiarity combined with more users providing more data to refine their search algorithms. And that creates this moat. It's a self-reinforcing cycle that gives Alphabet a serious leg up.
Ah, that makes a lot of sense.
Yeah.
But it's not all smooth sailing, right?
Exactly.
The Q4 2024 earnings report kind of had some highs and lows.
Yeah, a real mixed bag.
So where are the bright spots and where are the potential trouble areas?
Okay, well, one standout performer was Google Cloud. Their revenue soared by an impressive 30%, hitting $12 billion.
Oh.
They're securing major deals left and right, which suggests they're capturing a good chunk of the enterprise market.
That's encouraging. What about their other ventures? How are those performing?
Well, YouTube is still holding its own as the top dog for U.S. streaming watch time.
Good.
And even with the rise of AI, search revenue is still up, thanks in part to features like AI overviews.
AI overviews. What's that?
So imagine you're searching for, let's say, the best headphones, and an AI overview would give you this concise summary of top features, popular brands, and user reviews, all compiled and analyzed by AI.
Interesting.
It's a way to enhance the search experience. And interestingly, younger users seem to really embrace these features.
So they're not just relying on their existing strengths, they're actually actively innovating, which is good to see. But let's talk about the elephant, or should I say the robot in the room, AI.
Right.
It's clear that Alphabet is making a colossal bet on artificial intelligence. I mean, $75 billion in planned capital expenditures in 2025, mostly for AI infrastructure. That's a lot of money.
Oh, it's a bold move for sure, no doubt about that. Short-term profits might take a hit, but this really signals Alphabet's unwavering commitment to winning the AI race. They're playing the long game.
Absolutely. What are some specific AI initiatives that they're pursuing that our listeners should know about?
Okay, well, they've launched Gemini 2.0, which offers specialized AI models, and it's already attracted over 4.4 million developers.
Wow.
That's a staggering level of adoption in such a short time.
Yeah, that's really impressive.
And then on top of AI overviews, they've also introduced something called Circle to Search on over 200 million Android devices.
Okay, what's that?
It allows users to circle something on their screen. It could be an image, text, anything, and then instantly initiate a search related to it.
Interesting.
And these advancements are only the tip of the iceberg. Projects like Astra and Deep Research suggests they're delving into even more ambitious territory, potentially reshaping the future of search as we know it.
It all sounds very futuristic and very exciting. But what about potential downsides? This level of AI investment has to come with risks, right?
Of course, there are concerns about the impact on short-term profitability. Some analysts are suggesting that Q1 2025 could be rough due to currency fluctuations and a shorter revenue period. There's also predictions that the remarkable ad revenue growth they experienced in 2024 might slow down in 2025.
Okay.
And then let's not forget about the potential for uneven growth in Google Cloud due to supply-demand issues. It's not just about developing AI, it's about scaling it effectively and navigating market dynamics.
So it's not a guaranteed win. It's definitely a calculated risk with potential downsides.
Precisely.
And it's worth noting that while these huge AI investments could create some turbulence in the short term, Alphabet is laser-focused on making their AI as efficient as possible. They're not just throwing money at the problem, they're trying to solve it smarter. This could potentially mitigate the impact on their bottom line.
Yeah, I see.
They're also shifting their spending towards inference, which is essentially using AI to generate results rather than just training it. It's like the difference between building a powerful engine and actually using it to drive a car, inference, is where the real-world application and revenue generation happens.
Yeah, it's a good analogy.
So it's about optimizing their AI for practical use and maximizing its return on investment.
Exactly. They're betting that this strategic approach to AI development will ultimately give them an advantage in the long run. But as with any investment, there are no guarantees.
All right, so we've laid out the fundamentals of Alphabet's business, the impressive growth, the challenges they face, and their massive AI bet. Now let's get into the nitty-gritty of what the analysts are saying. They've set an average price target for Alphabet at $206.30 over the past 6 months. But, as always, there are both bull and bear cases to consider.
Right. Let's unpack those contrasting viewpoints.
Okay, so what are the bulls saying about Alphabet? What's making them so excited?
Well, the bulls are highlighting the company's dominant position in search and advertising. They say it's like having a prime piece of real estate in the digital world, a place where everyone wants to be. And this market dominance provides this steady stream of revenue, and it makes it incredibly difficult for competitors to catch up.
So it's about more than just being popular. It's about having a structural advantage that's hard to replicate.
Exactly. And this wide economic moat, as it's called, gives investors confidence in Alphabet's long-term stability, but it's not just the present. The bulls are also excited about Alphabet's future, specifically their leadership in AI. They believe that the massive investments Alphabet is making, particularly with initiatives like Gemini, will pay off handsomely in the long run. They see Alphabet not just riding the AI wave, but shaping it.
So they're not content with just being a search engine. They want to be the AI powerhouse behind everything.
That's a good way to put it.
But of course, every coin has two sides, right? What are the bears saying? What are the reservations?
Well, some analysts are wary of these hefty capital expenditures, especially those directed towards AI infrastructure. It's a lot of money up front, and it's uncertain how long it will take for those investments to generate substantial returns.
Right. So while the potential rewards are significant, so are the risks.
Precisely. And let's not forget the competitive landscape. Microsoft, for instance, is making aggressive moves in both search with their revamped Bing search engine and cloud computing with their Azure platform. They're not just sitting back and watching. They're actively challenging Alphabet's dominance.
It's a good reminder that even giants can be disrupted. What other concerns do the bears have?
Well, the AI field is getting crowded with new players emerging all the time. It's still early days in the AI race, and it's difficult to predict who will ultimately emerge as the leader.
So there's a chance that Alphabet might not be the ultimate winner in this AI arms race, even with all their investment.
It's a possibility, and one that investors need to consider. And then there's the ever-present issue of regulatory scrutiny. Alphabet, like other big tech companies, is facing increased attention from governments concerned about antitrust violations and data privacy.
Yeah, these regulatory challenges can be tricky to navigate and could potentially impact Alphabet's future growth.
Absolutely. Antitrust investigations and potential fines could put a dent in their profits, and stricter data privacy regulations could limit their ability to collect and use data, which is crucial for their AI development.
So it's a very complex picture with a mix of potential rewards and risks. What should our listeners take away from all of this? How do we make sense of these conflicting opinions?
I think it's important to remember that analysts, like everyone else, have their own perspectives and biases. Some may be more optimistic about the growth potential of AI, while others might be more cautious about the risks.
So how do we cut through the noise and figure out what's really important?
The key is to focus on the fundamentals. Look at Alphabet's core businesses, their track record of innovation and their financial performance. Consider the competitive landscape, the regulatory environment, and the long-term trends shaping the tech industry.
So it's about doing your own due diligence and not just relying on headlines or analyst ratings.
Exactly. It's about forming your own informed opinion based on a thorough understanding of the company, its challenges, and its opportunities.
All right, to help our listeners delve deeper, let's turn our attention to Alphabet's recent earnings call transcript. This is where we get a glimpse into the company's thinking straight from the horse's mouth, so to speak. We can learn about their specific strategies and their outlook for the future and how they plan to address the challenges we've discussed.
This is where things get really interesting. We can hear directly from Alphabet's leadership about how they're approaching AI development, their plans for Google Cloud, and their strategy for maintaining YouTube's dominance in the face of increasing competition.
All right, let's dive into this transcript and see what we can uncover. First things first, revenue.
Yeah.
The transcript highlights that they hit $96.5 billion in Q4 of 2024, a 12% jump from the previous year, not too shabby.
Indeed, and breaking it down further, Google Services brought in $84.1 billion, a 10% increase, while Google Cloud, our star performer, saw a remarkable 30% surge, reaching $12 billion in revenue.
Wow.
They specifically called out a significant increase in deals worth over $250 million, indicating they're winning over some big clients in the enterprise market.
Now let's talk AI. The transcript is just brimming with exciting updates on their AI initiatives.
It is.
They've unveiled Gemini 2.0, their latest and greatest AI model, and even a specialized version called Gemini 2.0 Flash, designed for speed and efficiency. And get this, over 4.4 million developers are already using Gemini models.
That's a testament to the appeal and potential of their AI tools. It seems developers are eager to integrate these models into their applications, which bodes well for widespread adoption.
It's not just about building new models. They're actively weaving AI into their existing products and services. So AI overviews, those concise summaries powered by AI, are now available in over 100 countries, making search results more informative and user-friendly. And Circle to Search, that feature that lets you circle something on your screen to instantly search for it, is now on a whopping 200 million Android devices. So these are concrete examples of how AI is already enhancing the user experience across Alphabet's ecosystem.
Yeah, it's fascinating to see how these advancements are bridging the gap between cutting-edge research and everyday applications.
Absolutely.
Yeah.
However, we can't ignore the elephant in the room. The cost of all this AI development. The transcript acknowledges concerns about the impact of these capital expenditures on profitability.
Yeah.
So what's their plan for managing these costs?
Well, they emphasize their full-stack approach to AI. Instead of just focusing on one aspect, they're optimizing every layer of the process, from the hardware to the software, to make their AI as efficient as possible. Imagine like building a house instead of just focusing on the foundation or the roof. They're meticulously planning and optimizing every single element to ensure the entire structure is as strong and efficient as possible.
So it's about more than just having powerful AI. It's about making sure that AI runs smoothly and cost-effectively.
That's right. By squeezing more performance out of their AI infrastructure, they can potentially reduce costs and accelerate their return on investment.
And they're also strategically shifting their spending from training AI models to inference, as we discussed earlier. Inference is essentially using the trained AI to perform tasks and generate results. It's like the difference between educating a student and having that student apply their knowledge to solve real-world problems.
Yeah. That's an excellent analogy. Training is the initial investment, but inference is where the real value is created. And Alphabet believes that this shift towards inference will lead to a better return on investment as it directly supports their businesses and generates revenue.
So they're not just building AI for the sake of it. They're building it to drive their business forward. And they're confident that their AI, particularly their Gemini model, is incredibly efficient, which they believe gives them a cost advantage over their competitors.
They're betting that this efficiency will be a key differentiator in the AI landscape, allowing them to deliver better results at a lower cost.
Speaking of competition, remember those concerns about Google Cloud's growth potentially becoming uneven? Did the earnings call shed any light on that?
Yeah, they addressed that point directly. They acknowledged that they encountered some supply-demand constraints in Q4 of 2024, which could lead to some variability in their growth rate. However, they emphasized that they're actively investing in expanding their capacity and remain confident in the long-term prospects for Google Cloud.
It's reassuring to hear that they're aware of these challenges and taking steps to mitigate them.
Absolutely. It highlights their proactive approach to managing their business and navigating market dynamics.
So before we move on, let's quickly recap what we've gleaned from this earnings call transcript.
It's helpful to synthesize these key insights.
First, Alphabet's revenue continues its upward trajectory with Google Cloud emerging as a significant growth engine.
Second, their AI initiatives are progressing rapidly, garnering impressive adoption from developers and seamlessly integrating into core products like search.
And third, despite their significant investments in AI, they're committed to efficiency and believe their full-stack approach, coupled with their shift towards inference, will give them a competitive edge in the long run.
An excellent summary. Now let's shift our focus to the broader market sentiment. Let's delve into those analyst opinions we touched on earlier and see what arguments are being made on both sides of the fence. This will give us a more comprehensive understanding of the potential risks and rewards associated with investing in Alphabet.
Sounds good. Let's explore those contrasting perspectives and see if we can glean any further insights. Okay, so let's talk about what the analysts are saying. We already mentioned the average price target for Alphabet's $206.30 based on their analysis over the last 6 months. But what specific factors are driving their opinions? What are the bulls pointing to?
Well, a lot of the bulls are really excited about Alphabet's dominant position in search and advertising.
Hmm.
They say it's like owning the most valuable piece of land in a bustling city. Everyone wants to be there.
Right.
And this market dominance, it generates this consistent revenue and makes it incredibly difficult for competitors to even gain a foothold. And that attracts investors who are looking for stability and growth.
So it's this wide economic moat. We keep coming back to the idea that they've built this fortress around their core business that's really hard to attack.
Exactly. It's a compelling argument for long-term investors who believe that this dominance is going to continue. But the bulls aren't just focused on the present. They're also enthusiastic about Alphabet's potential in AI. They see the massive investments in research and development, particularly with projects like Gemini, as a clear sign that Alphabet is positioning itself to be a leader in this whole AI revolution.
So not just a search giant, but an AI powerhouse as well.
Right.
That's exciting. But of course, every coin has two sides. What are the bears saying? What are the reservations?
Well, some analysts are a little bit concerned about the high capital expenditures, particularly those massive investments in AI infrastructure. It's a lot of money up front, and it's uncertain how long it will take to see a substantial return on that investment.
Right, so you have to spend money to make money, but it's a gamble.
It is a gamble. They
Right.
worry about short-term profitability, and they wonder if maybe Alphabet is spreading itself too thin.
Okay, what other concerns do they have?
Well, the competitive landscape is a big one. Microsoft, with the revitalized Bing search engine, and their Azure cloud platform is posing a serious challenge. They're investing heavily in AI as well, and some analysts believe they could chip away at Alphabet's market share.
It's a good reminder that no company, no matter how dominant, is invincible. What about those concerns regarding regulatory scrutiny?
Right. Well, the bears point to the ongoing antitrust investigations and concerns about data privacy.
Hmm.
They argue that these regulatory challenges could lead to hefty fines or restrictions on Alphabet's operations, which could obviously impact their growth and profitability.
So it's kind of a balancing act, weighing the incredible strengths and potential of Alphabet against these very real challenges and risks that they face.
Exactly. Investing in Alphabet is not a guaranteed home run. It's a calculated risk like any investment.
Yeah.
And it's crucial for potential investors to really understand both the upsides and the downsides.
Where does this leave our listeners? What key takeaways should they keep in mind as they consider investing in Alphabet?
I think the first thing to remember is that Alphabet has a really strong foundation. Their market dominance in search and advertising, combined with their diverse revenue streams, provide stability and the potential for growth.
But they are facing challenges: intense competition, high capital expenditures, and the ever-present threat of regulatory action.
Right. It's really important to weigh these factors carefully and make an informed decision based on your own investment goals and your own risk tolerance.
And don't just rely on what you hear from us or read in the headlines. Do your own research. Dig into Alphabet's financial statements, explore their website, read analyst reports, and perhaps most importantly, think critically about the future of technology and where you believe Alphabet fits into that landscape.
That's great advice. Investing should never be a blind leap of faith. It's about gathering information, analyzing the data, and forming your own informed conclusions. And remember, there are no guarantees in the world of investing, but by approaching it with thoughtful and informed perspective, you can increase your chances of success.
Well said. We've covered a lot of ground today, from Alphabet's impressive growth and their bold bets on AI to the challenges they face and the contrasting opinions from analysts. It's been a fascinating deep dive into a company that's not just shaping the tech industry, but shaping the way we live, work, and interact with the world.
It really has. It's been a pleasure discussing this with you.
Likewise.
Alphabet's story is far from over. It'll be interesting to see how their AI investments play out, how they navigate this competitive landscape, and how they address those regulatory challenges. It's a story that we'll continue to follow closely.
And we'll be here to break it all down for you, providing insightful analysis and helping you make sense of this ever-evolving world of technology and investing. If you enjoyed this deep dive, don't forget to hit that subscribe button and ring the bell so you don't miss out on our future episodes. We're here to help you stay informed, make smart decisions, and navigate this exciting and sometimes confusing world of technology and finance. Thanks for joining us.